All right, let's dive into a really fascinating company, one that presents a classic dilemma for any investor. We're looking at a business that is, well, by pretty much any measure, just exceptional. But the market knows it.
And that, right there, is the big question we're going to tackle today with Exponent. You see, this is a truly one-of-a-kind business that investors absolutely love, maybe a little too much. So is the price you have to pay to own a piece of it just too steep for the quality you're getting?
So who exactly is Exponent? Well, they've been around since 1967, and you can basically think of them as the special forces of engineering and science. They're the firm that companies, governments, you name it, call when things go catastrophically wrong.
I mean, just look at their resume. Their reputation was literally forged in the fire of some of the most complex failures you can imagine. We're talking about analyzing the tragic Space Shuttle Columbia disaster, figuring out why Samsung's phones were catching fire. They are the absolute go-to experts when the stakes could not be higher. You know, what's so brilliant about their business is how it's structured. It's really a blend of two things. On one side, you've got the reactive services. That's the emergency call after a disaster. That kind of work isn't optional for a company, and it can even pick up when the economy's bad. But then they also have proactive services, helping companies design safer products from the get-go. This mix creates this incredibly resilient business that can do well pretty much no matter what the economy is doing.
Now, this number you're looking at, over 640, this is everything. This is the company's core asset. We're not talking about factories or patents here. We are talking about pure brain power. That's the number of consultants who hold a PhD. That's more than 2/3 of their entire consulting staff. Try replicating that. It's almost impossible.
And all that human capital creates this incredible competitive moat around the business. It's not about being the biggest. It's about having a reputation for elite expertise that you just can't buy. Think about it. When your problem is super complex and critical, you don't shop around for the cheapest price, right? You look for the absolute best. And with a 68% repeat client rate, it's pretty clear their customers feel the same way.
Okay, so that's the story. But let's get into the numbers, because this is where you can really see the proof of this quality and why, as an investor, it's so compelling. Just look at this table. From an investor's point of view, this company is in a league of its own. I mean, look at those margins. Exponent's EBITDA margin is more than double its peers, and its net margin, that's the actual profit it keeps from every single dollar of sales, it's not even close. It's more than triple. Their profitability just absolutely dwarfs their competitors, even much larger ones.
And this chart just drives that point home. This isn't a small difference we're talking about. It's a massive, Grand Canyon-sized gap. The company's ability to turn revenue into pure hard profit is just exceptional. It's a direct result of that high-value, super specialized model they have.
And the financial strength here is just incredible. They hardly need any capital to run the business. Their balance sheet is pristine with nearly $250 million in cash and basically no debt. And get this, they've consistently returned that cash to shareholders, raising their dividend for 12 straight years. That just de-risks the whole operation and gives them so much flexibility. Okay, this all sounds a little too perfect, doesn't it? A nearly flawless business. But, you know, the market isn't dumb. It has recognized this quality for a very, very long time, and that brings us to the price.
And here it is. This is the other side of the coin. On pretty much every valuation metric you look at, you are paying a huge premium for Exponent stock. A price-to-earnings ratio over 35, a price-to-sales ratio over 7. I mean, these are the kinds of numbers you'd expect to see for a fast-growing tech company, not a consulting firm.
So this is the crucial point you have to understand. The biggest risk here isn't that the business is going to fail. Not at all. It's that it might just stumble a little. And because expectations are baked in so high, any little disappointment could cause the market to derate the stock. What that means is, even if the company stays hugely profitable, your stock could fall simply because investors decide they aren't willing to pay such a high price for it anymore.
And yeah, beyond the valuation, you have to weigh these other fundamental risks. Their entire business depends on keeping those experts. Their reputation is everything. And while they're resilient, a really deep recession could still hurt them. You've got to think about what could possibly break this amazing story.
So it all brings us back to that core dilemma. To help think it through, we can frame the future in 3 different scenarios. You know, a best case, a base case, and a worst case. So the bull case is simple. Everything just keeps getting better and better. The base case, and this is probably the most likely, is they just keep on doing what they've been doing. Steady, reliable, solid execution. And then there's the bear case, where one of those risks we just talked about actually happens, and it causes both the business and the stock's valuation to shrink. And that leaves us with the ultimate, multi-billion-dollar question that any investor in Exponent has to answer for themselves. Can a truly exceptional company, bought at a premium price, still deliver outstanding returns from here? You're buying undeniable quality, but you are paying a price that leaves almost zero room for error. That is the classic price of perfection,